Well, other big story for the markets here. Rate cut risks. Goldman Sachs CEO David Solomon says that the Fed won't cut rates this year as AI-powered efficiency keeps the economy resilient. And JPMorgan CEO Jamie Dimon says a hard landing for the U.S. cannot be ruled out. That's according to CNBC. And of course, we have to kind of take into consideration here what the Fed meeting minutes are also saying right now. And in those meeting minutes, in this most recent meeting, they noted, the FOMC noted their uncertainty about the persistence of inflation. And some of the participants pointing out here geopolitical events, other factors resulting in even more severe supply bottlenecks, higher shipping costs, continuing to put upward pressure on prices and weigh on economic growth right now. So very much a tone or a vibe in that room, it sounds like, that they are definitely not out of the woods as of right now. And it's still a question mark about whether or not, at least among some of the participants, whether or not they should still be hiking or holding for longer, or how long they should be holding for.
Yeah, and that's very similar to what we heard from Dimon yesterday in his interview with CNBC. He was over in Shanghai at JPMorgan's summit there. And he was just talking about the fact that inflation, obviously a lot stickier than what many forecasters had anticipated at this point. And exactly like what you just said, what we learned from the Fed meeting minutes yesterday is there's this narrative shift, it seems like, is happening amongst policymakers. More and more are starting to take a little bit of issue or more concern with the sticky inflation and questioning whether or not the policy right now at its current level, whether or not it is restrictive enough. And I think that leads us then to the commentary that we got from David Solomon yesterday when he went on to say that he does not see any compelling data at this point to support rate cuts at this time. He's talking about the fact that the average American is still feeling the pinch from higher prices. He referenced McDonald's recent results. He referenced the recent results that we got on AutoZone, just showing the fact that consumers are pulling back on spending. When you see the inflation levels elevated still, very high from what the Fed wants to see, clearly a lot higher than that 2% rate that we're at, the 2% level that they're hoping we do come back to. It is getting tougher for policymakers to make the case, and even for many of the forecasters out there to feel confident maybe at this point that we are going to be getting multiple rate cuts here before the end of the year.
Yeah, absolutely. Well, if we don't get any of those rate cuts by the end of the year, then the Fed will have accomplished its job in looking apolitical, at least.